Shikhar and Nidhi, before I ask you to introduce yourself, maybe just a quick warm welcome to everyone else who's joined us. As most of you know, we do this webinar on a fairly regular basis with the objective of trying to provide direct access to founders of companies we work with to help investors understand their business and then make more informed investment decisions. GRIP, as you may know, is an alternative investment platform. We've recently completed about 30 months of operation, 2.5 years, and a milestone of enabling 500 crores through our platform. Thank you so much for all the support and using us as an investment platform. Startup equity continues to be a very large opportunity that we offer on GRIP, and something that we are seeing significant interest on a month-on-month basis. My colleague Raman, who's on this call, leads that for us and has been curating very interesting investment options, including the one that we have today. Shikhar and Nidhi, would love for you to just introduce yourselves and also maybe tell us how you got into samosas.
Sure. Thank you for the introduction, Nikhil. And before we start Samosa Singh, I just want to tell you, congratulate you on creating a wonderful platform. So we ourselves have been using GRIP for almost 8-9 months now, and it's a wonderful platform.
Thank you so much. No, always great to hear. Thank you.
Yeah, so just to start and give a small, a brief background about us. So Shikhar and I actually ventured in, we are both biotechnologists by training. So I was, I'll tell about myself first. So I have a decade of experience before quitting the job 6 years back and starting Samosa Singh. So I worked in a US-based healthcare company. I was heading their entire sales and business development. And I worked there for 10 years until, Samosa Singh needed me full time. And that's when, I quit my job to full-time support Shikhar and Samosa Singh. Whereas Shikhar, on the other hand, was so passionate about creating something of his own and this idea of samosas that he actually quit his job much before Samosa Singh was started, when it was just at the ideation stage, because he never wanted two options. And that is why he quit his job. And after 6-7 months of hardcore R&D trials, Samosa Singh was started.
Okay, and Shikhar, we all love samosas, right? I think there's no question about it. And if you don't eat a samosa a month, I think that's you're not functioning in an Indian city. So what is it that, and as a biotechnologist, samosa is not the first thing that comes to your mind. So what is it that attracted you to this business?
See, actually, when this idea actually came when I was doing my master's in Hyderabad. So like we all know, like we have grown up eating samosas since we are from North India. So we have seen in every function, every party, samosa ke bina party adhuri hai. So when I came to Hyderabad, then I used to go, whenever I used to go to any cinemas and all, I used to see like samosa is also very, very prominently sold in South India as well. So I was very, because I always thought that North India mein chalta hai. So in South, we may not get a good quality samosa, but there are fairly good players also, unorganized, mostly in South India as well. So this is how, this curiosity came into my mind, because since I always wanted to do something, on my own. So I thought, why not, samosas, because since it's a widely known snacks in India as well as abroad. Then I did some research abroad as well. So to my surprise, there are about 1,000 different varieties of samosa sold across the world, and different names, different forms, different formats. So this was another which made my idea more convincing to myself that I should do something for this snack, which has a great history origin from India. So then we started working on this. Basically, after that, I started my job in Biocon as a scientist, and then almost for 6 years I worked there. But this idea never left me. So it kept pinging me, in different forms. When I was, I still remember I was coming from an airport from Hyderabad to my hometown. During that time, I saw a very small kid. He was actually at a bakery, a very posh bakery in the airport. So he was crying literally in front of his father. So I got curious why he's crying. So there is a huge showcase of products in front of him, where different kind of puffs, pizzas, lot of fancy bakery stuff, and there was a very humble samosa sitting between them. So he was literally crying for samosa. So I got, even the kids also, out of so many things, he's asking for samosa. So these kind of things keep happening to me. And then one day finally I decided after 6 years during my biocon days that we should do. And then I called Nidhi that it's time to start something
So
for
actually,
samosa.
Nikhil, just to add on to it, Shikhar, just 2-3 points here, because I think the entire agenda is to know the business, the founders, right? So Shikhar, when he was doing his master's, he was in one of the most elite institutes, Institute of Life Sciences, where all across the world, they just select 10 and 11 students. And he was one of the toppers there. And that's why, he would get collected his stipend and everywhere. And yet this samosa angle, came at that point in time. So I was little, we know that samosa is a great product. From day one, I was convinced of the idea. But then creating something out of a product which is so simple and which is present in every street, every nook and corner. So as much as it is rewarding, it is equally challenging. So that is why it took us a lot of time to actually gauge through it, study about it, do a lot of R&D, because it was not just a matter of, starting. If we start something, if we put ourselves into something, we actually don't give up until we make it big. And that is why that was the idea from the very beginning. And while he was at Biocon, I remember the day, it was October 2015, and he got awarded by Kiran Majumdar around the processes, doing really well in his career. And that day when he came, he said, everybody was congratulating him. And he was like, yeah, it's great, but I'm not meant to do this. I'm meant to create my own company, and that too around samosas. And I was like, if that is what makes you happy, okay, go for it. And the next thing we know, the next day he quit the job, just with the idea, no company, no brand name yet at that point in time. And then we started working from there onwards. So
it's a fantastic story. And I think that's that passion. Without that passion, anything else as a founder is irrelevant or inconsequential. But great to hear. And I think Nidhi also correctly that question that you're asking about, right? How do you make something that is so obvious, something that is so present,
correct,
into a venture funded startup business, something you can find on every nook and corner? I think is exactly the question I think most of us are thinking about, right? What is it that and I know you talk about snacks as a category, and that's what you're trying to address. But if you could run us through your thoughts into making a business,
sure.
a profitable, high growth business out of samosas.
So when we started, Nikhil, we were very clear about two things from day one. Number one, that if we want to make a brand around samosas, it has to be highly scalable and the quality has to be consistent. When we came to Bangalore, we saw so wonderful startups around food, not around samosas, but around food, which were, in BTM, in Koromangala, in Electronic City. But unfortunately, the experience of the restaurant varied from region, the demographic to demographic, because the cooks or the chefs were different in every kitchen. And that is why we wanted to create what McDonald's had done or what Domino's have done. We can never claim to have the best samosas in the world, because you cannot define a best samosa. For a Kolkata side, a Singhara will have a very different taste than a Punjabi samosa or a UP ka aloo samosa. So it was rather than going and making the best samosa, we wanted to go in the lines of burger, what McDonald's has done, and Domino's, what they have done for pizzas. They may not be the best pizzas or the best burgers, but people know what to expect out of the brand once they enter into it. They know that it's made hygienically, it's made consistently, and you can actually trust the brand. And that is why from day one, when we were into R&D stage, we were very, very sure that if we start products or if we start a business around samosas, it has to be consistent. And that is why it has to be made centrally and then fried across the point of sales across. So that was the first point that we really worked into. And number two, obviously, was that we don't really have to bring in too much of innovation, because the product is such, aap iske andar dalne ko kuch bhi dal sakte hain. You can really put any filling, but then it has to be something which resonates with the Indian palate. We, based on customer feedback, initially during R&D stage, we tried a pasta samosa as well. But then 2 layers of maida, when you bite into it, the outer crust and the inside filling, the maida thing, just it's not too palatable. So that is why that was the second thing. And obviously, if you have to make a consistent thing, there has to be a certain level of automation that needs to be involved in this. So those were the ideas. And like Shikhar was mentioning how the idea started, we started everything with our own money, our bootstrap thing. We put everything we had saved or whatever we had into the business. And then we started in the B2B domain. So he saw the cafe, that cafe became our client. We went into airlines. Every airline served samosa. So all the major airlines became our clients. We served to Air India, Jet Airways, Air Asia. Then multiplexes, be it a Gold Class, PVRs, Inox or Cinepolis, we were working with them. So Samosa Singh started as a major B2B player. And that's how we made our capability of rolling out good samosas. And for 4 years, 3 to 4 years, we were primarily into the B2B space. So we picked up 2 industries, Nikhil, travel, entertainment, assuming recession would never hit them. But COVID literally not just hit it, but it just stopped it. And in March 2020, our entire business of airlines was shut, multiplexes were shut, big corporates were shut.
Okay, I have so many questions, but we'll take them one at a time. I would love to understand how you handle the COVID phase. But before that, just if you talk about B2B and maybe two questions there. One, given that a lot of airlines have come back, travel has come back, theaters have come back, is that continues to be part of your business, and what part of that revenue is it? And when you were running it pre-COVID, was that a profitable business that you were able that was scaling up? I'm assuming it is, but would love to hear some more from you.
Yeah, so before COVID, we reached a profitable level with B2B. So B2B was about 90% of business was B2B, because in 2019 only we started pivoting a little bit on the cloud kitchen side with some 10% addition to the revenue. And on the continuity part, like during COVID, so before COVID, it was okay. Like expansion was good. We were getting good clients also. But during COVID, lot of things happened. Basically, your payment got stuck. Then clients also, tried to develop some in-house capabilities, not for maybe for samosas or many other products. So like for now also, if you see multiplexes and all, there is still a lot of
packaged that they are going ahead with.
They are more keen on the packaged kind of stuff. They don't serve a lot of things like they used to do before COVID. And in airlines also, now everything has been, is a paid thing, like not unlike earlier, except few airlines and all.
And so they don't do fresh anymore. So earlier when we were working with Jet or Air Asia, they had that convection inside where they would do. Now because of COVID, they've increased that to the number of seats. So the convection heating is no longer there. So what they serve is the packaged option where you just add hot water to minimize the wastage, etc.
Plus credit period was one of the biggest problem which we were facing. Like for airlines are known to be a very bad paymasters. So earlier also they were doing about 2 to 3 months of credit period, but now after COVID they have increased it further. Like airlines, they go as high as 6 months. So which is like highly impossible. So you have, it's like a dead payment, dead money which is lying in these accounts. So we took a call across that we for temporarily, I think we should hold on to B2B, because we were getting a good traction in B2C side in the cloud kitchen space. So we kept on building from then onwards. Like before COVID, we were about 5 kitchens. We just started that time, and during two years of COVID phase, we built about around 55 kitchens during that time itself, and we got a fairly, so basically our business was also good. Like before COVID, we were about at 80-90 lakh a month kind of business, which came down to about 5 to 10 lakh approximately. So from there on, we have built it again, and so far so good. Like we have got a very good traction. Consumers are now at least getting attached to the brand. We are getting a good brand visibility, and now since now the things have normalized, so we have started moving into physical stores as well. So we're launching soon in Bangalore, like this month itself.
Yeah. So with your this fundraise will primarily be used into the physical hybrid stores expansion across the cities.
Got it. First of all, incredible respect for you to go from 90 to 5 and then back up all again. I think that takes a different level of mental strength and sort of commitment to get it done. If you could just and a lot of startup investing is a lot about the founder, right? And I'd love to understand, if you dial back to April 2020, when COVID hit, how did you guys react to that sales just disappearing, right? And businesses disappearing. You had costs, you had a team, you had employees. What did the first 3 months look like, and what are some of the decisions that you took that got you back into this place?
Sure. So March 19, our multiplex was worst hit. And just before that, we had bidded against 80 plus companies and opened our first physical store at Bangalore International Airport. It was just next to Starbucks. We had put a heavy investment there because nothing easy goes into airport. And that was a slot that is given to us for 6 months. We run it for 1 month and we actually surpassed our sales targets and everything. And then COVID started impacting in the month of February itself. And we opened in the last week of Jan. So it was just a matter of 1 month that we started seeing an impact. And then March, April onwards, it was completely shut. So for the first day, for the 1 day where Bharat Bandh was announced on March 20th or 21st, that was 1 day when we really saw zero sales. And in the history of Samosa Singh, that was the only 1 day. And then the same day, Shikhar was in different location, I was in different outlet, and we were just talking to the superintendent of police and everywhere to actually get the necessary permissions to let samosas, continue, and Samosa Singh continue the production as well as the sales and the supply part. And that's when we got the necessary permissions. In fact, I was along with the Domino's vice president, and we were the only two companies on the very second day of the sales where, we were delivering across Zomato's and Swiggy. And then the next thing we knew is that this is not something which will curtail just in a month or two. And that is why we have our central manufacturing facility where everything was made. And we used to call it a samosa factory. In fact, the bus stop there itself calls it the samosa factory bus stop. And it was always called a samosa factory because only samosas were manufactured. Every other thing that goes, like say chutney or chole that goes along with samosa, chole chaat and other things, was always outsourced. So in the second day of COVID itself, we called all our production team and everyone, and Shikhar gave them 24 hours time frame, that now onwards, every single thing will be made in our central facility. It's a manufacturing setup. Don't think of it as this thing and as just a samosa restricted factory.
So when we entered in cloud kitchen, so we took one major call, like because since we are serving direct to the consumer, that to online at the convenience of their home. So definitely when somebody want to order samosas, they would definitely look for some complementary items. Because not necessarily every time somebody will ask for samosa, they would ask for chaats also, which goes, during the same time zone. People are habitual of eating these things outside, like Indian street food. So when you go to a typical halwai shop, you'll get samosa, chaat, samosa, chole, or, these kind of items. So we thought, we should have some kind of array of these kind of items as well. So that's how, when we started building in-house capability for all these things, because we were very clear that if we take from outside, then we will be hit by the, very badly by the margins play. And since we are entering into a cloud kitchen, your gross margins play a very crucial role, because a lot of goes into commissions and all in discounting and all. So then we started working on all these products, and we were successful to bring about almost 95% of items which still now we are producing. Everything is done in-house.
Everything. And then the second thing we knew was that we had a strong data analytics team, which used to analyze the data, what the customer has to say, and what was where do we do. And along with us, we actually created a big algorithm, home in-house demograph and etc. because we knew that if there would be a lockdown relaxation, we would not get a huge window. It would just be a window of few weeks. And in those weeks, we should be ready to actually quickly expand in Bangalore and also move to other geographies like Hyderabad. So during COVID itself, we were ready with the demograph, identifying which areas are prominent for online ordering, where there is a good traction of apartments and, home-based offices, because now those corporates would not work, where people have a good capacity, taking some data from the aggregators and understanding where online long distance orders come for us. And if there is a long distance order, means a person is paying a commission on delivery. They can pay it only for a restricted number of days when there are good restrictions. But once restrictions are back in place, when they are no longer there, then so they'll not order, with such a high delivery fee. So why don't we open an outlet, where we have maximum orders of long distance? So looking into all these things, we created an in-house algorithm. Definitely, there are still third-party companies who do that, but we wanted to do everything on our own because and I'll tell you one more thing, Nikhil. At that point in time, we were fund rich. It's not that we didn't have funds. We had closed our Series A just around,
Before.
2019.
Yeah.
Yeah,
Yeah.
but it's not always about taking that fund to actually sustain. We wanted to achieve whatever we had promised with those funds. So that is why, I mean, like every other company, there were certain cost reductions, there was certain trimming of the loose ends, etc. But at the same time, we also started doing everything in-house. And as soon as there were first lockdown restrictions, we expanded in Bangalore. During the first relaxation, we started in Hyderabad. And that is why during COVID itself, we moved from 1 city to 8 cities.
Wow,
And from
fantastic.
4
Okay.
outlets to 50 plus outlets now. So, and not just tier 1, because that was a very common question that kept coming back to us, especially for us. Tier 1 cities will always perform good. There are a huge number of people ordering. What about smaller cities from where we belong to, right? Tier 2, tier 3. What about Mysore? What about Pune? What about Vijayawada? What about Vizag? Will these cities actually be a good market for you? Because there are people who would there. And that is why we wanted to test. Because if your brand, if your product gets accepted in tier 2, tier 3 cities, there's nothing that can stop it from being a pan-India brand. And that is why while we were expanding during COVID, we also picked up tier 2 and tier 3 cities.
Understood. No, really impressive. And I think lessons for a lot of founders from what you guys did in that time. How quickly did sales recover? And, probably and if you could just maybe, talking a little bit of the numbers, because I think there are lots of questions around this. How quickly did sales recover post it? And also if you could talk a little bit about how consumer behavior has been, especially with respect to retention or repeat usage.
Sure. So we'll start the first question. How soon was the recovery?
Yeah.
2019, we, post COVID. So initially for first 6 to 7 months, it was a tough phase because we were not able to operate properly, logistic issues, permission issues. 2020. But in 2021, we did a major expansion. So almost about 50 stores we started in 2021 and about 50 stores, and almost 1 year it took us to reach to our previous numbers, about 90 lakh of sales. And but as on today, we stand at about 1, because many cities have started maturing, because generally these cloud kitchen take 3 to 4 months to ramp up to a sizable revenue, which is very much required for breaking even. So currently we stand at about 1.4, 1.5 CR a month kind of revenues with these kitchens. And,
these are all cloud kitchens.
Yeah.
Understood. Yeah. And I know that you're now planning to open physical stores.
That will start next month onwards.
Okay.
Yes. And to answer your second question, the consumer behavior. So yes, initially it was little challenging because everything was in a little chaotic way, like there was certain, like we were on Amazon Foods, then there was Swiggy, Zomato, they would do their own audits, they would require certain videos to be uploaded. So all those things, listing, etc., took us some time to get there, but yes, it was there. Customer retention rate we have seen is really good. And for a product like samosa, the market itself is very huge, right? So it's not that, and plus one thing I would like to mention, because from the very beginning, we were doing these online during COVID. Now, I would just see categories like pizzas and biryanis. And whenever you would open Swiggy, you would just see categories like North Indian, South Indian, pizza, biryani. And those were the categories. In fact, biryani is something which I have been lured by these aggregators to test it and try it, because every day a new exciting brand comes out with those sumptuous pictures and you actually want to indulge into it. And during COVID, because of the demand of the evening snacks, there was a new category which started called as samosas. And there was also a category of kachoris. That was something which is, and chaats, something which is never seen before pre-COVID. So now as soon as it's 4 o'clock and 5 o'clock, you open the aggregator, you'll actually see a category of chaats and samosas. So that was a great thing, because it's good to have that much traction. It's good to have so many players offering this, because that itself drives the market and the consumers to be able to try out the new products.
Understood.
Yes, our customer retention has been favorable, and that is why during COVID, while we were using that money for expansion, we actually did not spend much on the marketing because we wanted to put that money into our stores expansion and all.
Got it. If you can talk a little bit about competition in this dynamic that happened, I'm sure that around this time, a lot of companies were trying to target either around samosas or snacks, but also through cloud kitchens. How do you see competition for yourself? And is there someone that, or a couple of companies that you particularly think of as competitors?
See, there is competition in every city that we go to, right? Even when we started in multiplexes also, there was a competition which was already there in Mumbai, in Bangalore, where they were already taking the samosas from a vendor outside. Even in Mumbai, Guru Kripa, that Sai Kripa is one of the A1 samosas, what some people call it. I think it's gone, it's there for centuries, and it's actually for all, not centuries, I'm sorry, decades, right? It's been there for decades and people have been having it since long. So it's not about displacing someone. It's always about a value addition that we offer. It's also about coexistence, because having competition, like I said, Nikhil, in this market is really good, because that shows that there is a potential. That certainly shows that there is a huge market out there for us to explore and for people to actually try out multiple options, because this is not a product that they will have one. It's always about celebrations. It's always about volumes. And it's also something that people tend to have almost every day. So to be honest, especially in cloud kitchen domain, online delivery competition has supported us.
And especially this domain, this cuisine, basically traditional snacking, has always been dominated by unorganized players. So
correct.
Though there are good chunk of organized player as well, like in North we have Haldirams, Bikaner Wala and all. In South also we have some Anand Sweets and all. But still, if you see from the size perspective of the market, still more than 90% is unorganized. So there is a huge scope, of capturing these unorganized space, because definitely in smaller cities and other cities where you have very less of hygienic option of these kind of item, but people, they do seek for these kind of thing, in the hygienic way, in the consistent format, or at the convenience of their home, because these thela wala and all, they are not certified, they don't have an hygiene practices, they can't supply it to the home as well. So there are a lot of restriction which can be countered by these kind of brand play. And there is, yes, obviously, as Nidhi said, there is a huge scope. Any branded player can fit into this section, so there is not a scarcity of in this
the market there. Plus, Nikhil, every competition or every other brand that sells samosas, to be honest, have their different business model. Like there are certain companies in Bangalore, there is one company in Mumbai, there's one company in Delhi North who is a similar name and doing all of those things, but they have a different business model. They are either in the QSR space and now foraying into cloud kitchen, or they are basically taking the products from third party, making putting it under their brand and selling. But our business model is very different. We operate out of a business model that is, first of all, our strength and our backbone. The reason we put everything into the business, our lives, our last 5 years and everything, is not just about selling samosas and creating a business. It's about creating a brand around Indian street foods that needs to be known. And that is why we do not really want to get into a quick rat race of just working on the top line and let burn continue to be there. We actually want to build a sustainable business model where our cities become positive. There was a point in time when we actually had touched good number of kitchens, cloud kitchens, but then we give every kitchen 3 months. If there is not a sustainable business in 3 months time, and not just with marketing, innate, organic, if there's not much business, then we either move that location or we just stop it. But with this algorithm that we built in-house, like I said, our number of shiftings in the kitchens has reduced considerably, because now we don't blindly open. We do it, this thing. We have recently ventured into certain collaborations also, like, with Cure Foods and Rebel, etc. And all of this has been possible only because of our very attractive unit economics and our business model. Because no other company can benefit. I mean, you can only mutually benefit if there's enough commission or margins for both the companies to sustain. So that is why, we are actually trying to build a sustainable business model. That is why we are not going for a very big fundraise. With this fundraise, we take the company to where it has to. We also take the company to a positive EBITDA at a company level. Currently at city levels, we are positive. We want to take it at a company level and make the company self-sustainable and good brand play across.
Just double clicking on the profitability aspect. So when you talk about the cities being profitable, you're obviously in multiple cities. Is there a time period after which the cities become profitable, like number of months after they become profitable? Do you typically see that? And as you think about the future, right? You said you're looking at getting profitable with this fundraise. What is as compared to the numbers, how do you look at it? Number of samosas sold a day or a certain revenue threshold that gets you to profitability? If you could just spend some time talking about that.
Yeah, so our each kitchen typically do a break even at about 2.5 lakh of sales.
Okay.
So which is about, you can say about 30 odd orders a day kind of business. And so in terms of like kitchens, like 3 to 4 months, we assume like it again depend. In tier 1 cities, generally 3 months is the time period when we see a break even. In tier 2 cities is much faster because you don't have much of a, the marketing spend is less. People don't have much options available. So there is in less than a month time also we see, first month itself we start seeing profitability coming up. And for any city to be a profitable, because generally when we go, we open about 10 to 15 stores in big cities, and smaller cities about 5 stores kind of thing. So typically it is about 6 months to 10 months it takes for any city to become a profitable. Like we are, so currently as a whole, we are profitable at all the cities, like whichever we have launched in past 2 years. And we are just burning only at the organization level, so which is at the corporate burn. And so going forward, bringing in these physical stores will also definitely add up a lot on in terms of positive EBITDA line. So we are expecting that this, because will always be a difference. There is some whenever you open a store, there is always an online sale attached to it, and there is some people who definitely walk in also. So some walk-in sales also add up to the stores. So we are expecting higher revenues, higher EBITDA at these stores. So within 12 months, we are expecting our company to become break even and start generating profit.
Understood. And is the marketing typically done at the corporate level, or is it done at the store or city level?
So we do currently, because since it's only cloud kitchen, so we are not doing any ATL activity. It's all performance marketing, which we do on Swiggy, Zomato, because that is the only source of revenue currently. But yes, once we now start with the physical store, then we'll engage in some at corporate level as well.
Got it. So the corporate expenses where today there is, where you need to break even is coming largely out of salaries and
so
any kind of performance marketing.
Yeah.
Mainly the corporate running cost of the core team.
Those have to, there's a scale that they have to achieve to break even, and typically revenue increases far faster than those costs. So that's the only way to break even. Got it. If we can, come back to the question on a little bit of competition and also on pricing, right? I think a lot of people who buy samosas typically buy it from you end up walking, and it's also sometimes a spontaneous buy. While competition versus another cloud kitchen or a branded company is well understood, how do you even think of the roadside vendor as a competition? Is disrupting him a opportunity, because the price point is very different, right? The samosas are sold for maybe 10 rupees, 20 rupees. How does that figure into your strategy? And how do you think about pricing of the samosa itself that you sell?
So 10 rupees samosa price point, we cannot touch that. We cannot. And, competing with them will be literally you going in a different direction. That is just not sustainable because of the quality of oil and, few other things that we use. So that is something which is out of question for us, and it will be there for everyone. Secondly, when it's about cloud kitchens, yes, there is going to be a different price point versus a person walks in. So now when you order a samosa online, you actually order a plate of samosa, which is 3 pieces, versus when we do a standalone, which we will start shortly, their person can also order 2 samosas, or, the price point would vary because here their commissions and few other things would not be involved. And yes, our price points actually, they start from a plate, if I talk about per piece, it's about 25 to 30 rupees currently online, which gets catered to the client. But I think how it does not hurt us anymore, I mean, this price, putting it at 30 rupees or 25 rupees is because now people just don't order one samosas. They order, they order volumes, or they order multiple varieties. They order samosas and chaats. They order few beverages and sweet along with it. So it's basically like an entire cart put, and that's why we're doing it. So I don't know if we can really compete with a 10 rupee thing, but Nikhil, to be honest, anybody who sells samosas in Bangalore or Mumbai, where we go ahead with, it's mostly in the same price point at 25 rupees and all. Now, just one very interesting insight. We started in Mumbai. When we started in Mumbai, we intentionally thought we will not have anything related to pav. And there is one mini meal in our category, which is a samosa pav. People love it in the morning. It's like samosa in the pav, and do it. And just to add one more thing, during COVID, we started making pav also in our own factory. I put my home oven into the factory and we started doing it. And now for Bangalore, we are making it in-house. So the pav, we decided we'll not put it in Mumbai. And we just started with samosas, chaats, and few other things. It was just a matter of 2-3 months when we started getting requests of incorporating pav items also. The reason we didn't do it is because we know we can never, ever, match up to the price point of a pav that gets sold in Mumbai versus getting it online. But in order to match up to it, we started requesting 2 pieces together in a plate, 2 pieces of a samosa pav or all of that. And it works for us. It may not be a huge part of our the sales percentage, but it's good enough to actually build your cart and ensure that the entire family can order.
Absolutely. Yeah, we are all about offering people different investments. I can understand why you need to offer different parts of that snack palette. On the, you've seen an incredibly healthy growth rate in revenue, right? And one of the key steps, you've moved to cloud kitchens, but I think Cure Foods as a partnership, and we'd love to hear more about that, could probably be a great enabler also in that growth as you think about the future. Could you talk a little bit about what, and maybe, if you would introduce Cure Foods, a lot of people may not know what Cure Foods does, and what that partnership for you means.
See, we've just started that partnership just to introduce, Cure Food was actually a part of CultFit, and they got split, and one of the founders of CultFit has now started Cure Foods, Eat Fit, with the brand name of Eat Fit. As the name suggests, they are purely into fit food, but at the same time, they are also into the food that basically people want. Today samosas may be fried, but at the same time, it can be made healthier if the quality of the oil used is good, if it's not dripping in oil and all those other elements. Anyways, Cure Foods, talking about it, it's now one of the major cloud kitchen players. They're basically expanding into the cloud kitchen domain in all these big and smaller cities. So the entire idea of this is, again, leveraging each other's expertise. They believe that they require a partner who could manage their kitchens ka evening time frame when their kitchens are free. They have their parantha brands. They're working with all those meal brands, but the snacks category, they wanted someone. The reason it works fit for both of us is because the unit economics works favorably. Like I said, it's a win-win for both the companies. And we are testing it out at a pilot level currently in 2 cities, Mumbai and Pune. And if it works out well, we are actually then going to scale it across. And once it happens, I'll share more details with the people who get on board with us, Nikhil. But I think currently the time is not ripe yet because we've just started that partnership, and all things great till now.
Fantastic. Okay, good to hear, and all the best for that. One last question, and then we'll go into also talking about the fundraising round. As you think about growth, are cloud kitchens as well as stores both franchisee and company operated? Is that the plan, or is only plan to stick to company operated?
So currently,
so currently for next few years we have plan only for company operated. Though we are simultaneously working on building upon the franchise as well, like in cloud kitchen space with Cure Foods, it's a kind of that kind of agreement only where they run the brand and ownership retains with us. So we are testing it out. So if it works well, then maybe in future after 2-3 years we can think of entering into this space as well.
Got it. Understood. Maybe talking a little bit about the round that you're raising. You're raising 10 crore rupees. And I believe 8 crores has already been committed. If you could talk a little bit about the structure of the round and who are some of the other investors who are participating in this.
So in this entire round, our existing investors are they're basically leading it. They're participating in this. We also have certain angels on our previous cap table. They're also upping their amount. We also have some strategic partners in play, like Bikaji Foods and Anand Sweets. They have personally put in their money in our company, again, because of the wonderful synergy and leveraging each other's expertise. Our current cap is 2 CR that we are aiming to bridge through GRIP. And it's going to be a part of the same equity round, and it's a convertible debenture, CCD, that we are doing with a 10% discount.
Understood. Perfect. I'm just going to go to the questions that we have on the chat. There are lots of questions. I want to make sure that we cover as many as possible. Picking the first one up, and probably the one that's most bang on is, how do you plan to, if you can give us some more details around path to profitability in a year's time. I think that's just the flavor of where we are in the funding cycle. Would love for you to share, if you can elaborate on the points that you had earlier, to talk about what the plan is.
Sure. So see, currently, like we said, our cities are already positive, right? We are basically breaking even at each of the cities, and our mature cities are also a bit positive. Now with this hybrid store, or with the hybrid concept of having walk-ins as well as this, are obviously first of all, there's a good brand play that happens, because people get to see the brand. They actually get more associated and related to this. Number two, how it works is that you'd really, on the walk-in orders, you don't really pay a commission, right? So that is why your margin or your EBITDA again tends to increase into it. And definitely, that goes unnegotiable, that you also have a push in the sales, because it's visible, it's strategically placed. So all these things will automatically boost your sales. And whereas our company overall expertise in terms of our production capacity and everything, we don't really need to revamp it, because that is something which is already comfortable there. So that is why this money is mainly for growth. And while we are growing, we are not extensively adding a lot of cities. We are already in 8 cities. And now the idea is to consolidate our presence in these 8 cities with the good brand play and hybrid model that goes. So looking into all of those things, we are very confident of actually hitting a positive number much sooner with the same strategy that we are going ahead with.
Understood. Okay. The second question is around corporate costs, because you mentioned that was the largest part of your burn. Would you be able to give us some flavor of what the monthly salary bill for the company looks like? An approximate idea, a number would be great.
Corporate salaries is about 16 lakh a month.
About 16 lakhs a month. Got it. Okay. Thank you.
An effective team.
Yeah, no, I think that's a commendable number. I think for the scale of operations you have, I think that's one of the lower numbers that I have seen in terms of corporate salary bill. Sorry, I'm jumping around on the questions, but the next one relates to the instrument for investment. So this instrument for investment is a CCD, which is being issued at a 10% discount to the next round. Just to explain to everyone on the call, it's a convertible instrument, which means that it will convert into equity depending on the valuation of the next round. If the next round's valuation is 100, it will convert at a 10% discount or 90 rupees into equity. So it's not a convertible bond, because it's not debt, it is equity, but structured as a convertible instrument. For more information on this, please feel free to reach out to the GRIP team, and we'll make sure you understand what the instrument is. Next step of when you ask about investment is always about exit. So it's always the toughest question to the founder. I've never been able to give a good answer to how you think about exit options. But D2C is the flavor of the season when it comes to acquisitions. So would love to hear your thoughts on what is a potential exit timeframe. How do you think about that over the next 3 to 5 years, and what should investors keep in mind?
So
see, most probable exit pathways. So we don't want to say IPO, because we all know IPO is going, which route, and that's, it's a distant dream for any company, and it takes time to reach that level. So the easiest way for our kind of business is, going through a strategic exit way. So there are many strategic players who play into the similar domain, be it Haldiram, Bikaji Foods, and also these big players. They have good profitable businesses built around certain packaged snacks majorly, and they have good basically pocket sizes. So they would definitely seek for businesses which can give them leverage of the tech from the tech side, since we have built everything in currently on the food tech side with the brand play. So this could be one of the good option. In fact, with this, in this round we have one small ticket size coming from Bikaji Foods as well. So they are also participating with the future prospect of putting on follow-on rounds, and then eventually they could also be one of the option for to giving exit to the investors.
So just to add on to this, Nikhil, Shikhar and I will continue to actually run and create the brand till we take it to a pan-India and a world level. But definitely to the existing investors, which includes our Fireside, Equanimity, and everyone, it's actually going to be through a merger or through an acquisition route. And this way, it's not just about, we giving our company to someone big, but it's more about leveraging the expertise of both the companies and then creating something big together. And one great good thing that COVID has actually brought about in the industry is that people have understood the value of these partnerships, right? Like PVR and Inox, I worked with both of them and they were literal rivals. They would not even talk about each other, though that's not the way it should always be. Competition should coexist. But anyways, and now with COVID, they've bought joint hands and creating something of their own. So that's exactly what is required. Not everybody could do everything. So even if it's Bikaji or it's Anand Sweets or it's Haldiram's or it's Rebel or it's CFI or anyone for that matter, it's about they building on their own expertise and we leveraging on our expertise, and then both coming together and could be a potential exit to the investors, and we continue to build it using the best of both the companies.
And
So
definitely the follow-on rounds, like we go to a series B and C. So that also could be one of the possible way where the secondary stake sale can happen.
Yeah.
Yeah.
And once the company turns positive, which we will make it happen, that's a non-negotiable fact for us. The entire paradigm shifts. You are in the industry, you understand what I'm referring to, right?
Yes.
So, I mean, that could be a great thing because then the money is just required for growth and exits.
Yeah, no, absolutely. And I'd just like to add that, startup equity investments or investments of this nature, irrespective of the company, should be thought of as long-term investments. It is, we typically advise everyone to think of a 5 to 6 year tenure. There may or may not be opportunities in the middle to create exits, and investors should keep that in mind. I think the important thing is to bet on the industry, bet on the founders, and then allow them to work and try to deliver the results. There are a couple of questions on the technology, right? And actually, we've included in our website memo some interesting details about how you've thought about the interlocking structure of the samosa that creates more efficiency, or how you reduce the greasiness of the food. Something that we didn't get a chance to talk about. If you could spend a few minutes on that, and also, samosas are considered to be eaten hot. So when you deliver them, can you heat it in a microwave and does it give it the same experience? Have you done is there some research and R&D of the product development that makes that happen? Would love to hear that.
So these changes basically we get to know much earlier when we were serving to airlines and all. So this was a typical, and in multiplexes, this was a very typical problem. Like in multiplexes also, when you serve samosa, so there is an interval time. So there is some time gap between you actually fry because you can't, interval is a very small time period, just 5 minutes break. So you can't cater to many people without preparing samosas upfront just before the interval, some half an hour before. So this was the strategy we had to implement in multiplex, and we were facing issues because by the time people start coming up, it becomes cold. You either have to microwave or serve them as it is. So this was a challenge. And same thing in the airline industry as well. When in airline industry, when they serve samosas, they have a convection oven, so they reheat the samosas and serve. They don't have a frying capability and all. So again, the samosa becomes soft when you do the microwave or convection. So these were the two major problems which we were seeing at that time. So we started working on the
R&D part,
R&D part.
addressing it.
How do we change these things so that people get hard and crispy samosas?
Nikhil, again, just to remind, our combination is more of a scientist and sales, right? So we also looked at what the market wanted and what we really wanted to do. When we first got a big order, when we had just started about 4 months into the business, we knew that automation is the key. Otherwise, the first samosa or the 100th samosa can never be consistent. Trust me, it cannot be. आज अगर cook का mood अच्छा है, वो उसको अच्छे से roll करेगा, बेलेगा. So if not the entire aspect, at least some critical aspects of the samosas need to be automated, which is basically dough making, which is a general automation every bit industry has. But the major was the sheeting, where you ensure that all your samosa sheets are basically consistent thickness and the amount of filling that goes inside. Otherwise, good mood, nice energy, they roll it well. Otherwise, they don't do it. And that's when once we got big orders, we had an idea in mind. Shikhar spent more than 9-10 months outside and in the country working with different CAD engineers to actually come up with an automation that addresses this idea of not making the samosa look so pretty, because that was one feedback. When we worked in multiplexes and airlines, we made our samosas so perfect. People say it's so beautiful to be called as a samosa. The imperfection of a samosa makes it perfect. It has to have that element, that feeling. So all those things. And that's when we approached Kamal. We never actually fundraise has never been a challenge for us. We just, we had Kamal in mind because he had supported the fireside ventures, basically, because he had supported the kinds of big in this previous thing. And he had just started fireside at that point in time. When we met with him with just this, we told him that this is the automation. We already have created a prototype and now we need to bring it here. What automation does is, we know that maida is used in samosa, in kachori, in bhatura, in everything, right? In kulchas, etc. Yet the consistency of every product is different. A samosa crust is different, a kachori crust is different, a bhatura crust is different. Everything matters on how much pressure that is put to break the required gluten bonds, how much resting of the dough happens, and etc. So with that first fundraise from Fireside, with that conviction he had in us, we actually brought that prototype automation into fruition, into reality, where it basically just puts that much pressure in the sheeting. The sheet thickness, etc., is consistent. The amount of filling that goes inside is consistent. So currently, that's the level of automation that we have. I mean, and frying happens as in, but with this, we eventually are also in the process of automating the frying part as well. So this is it, and which basically adds on to the consistency part. Otherwise, you cannot have it consistent. And that encrusted shape also ensures that the samosas stay crispy for a long period of time, just like Shikhar was mentioning, that this was a challenge or a bottleneck that we faced in the airlines and the multiplex industry. And in addition, when you fry these samosas, they actually don't. So if it's a typical conical shape of a samosa, the oil acts as a cooking medium. It goes inside, cooks it, and seeps out. But in this case, it's encrusted on all the sides. Its surface floats, and therefore it absorbs much lesser oil. So though there's a subtle reference that what you're eating is a 50% less calories in fat, we don't promote ourselves as healthy samosas, because the minute you say it's healthy, people register less tasty. Yeah. So it's a fried product, but yes, our automation supports us in making it less greasy. It also supports us in making it consistent, and having a good, basically scalability is now not a concern for us any longer. It's just about putting the accelerator, this thing, and just getting started.
Got it. What is it that worries both of you as founders the most about the business? What is it that keeps you awake at night?
See, there has been different phases. I would say the tensions, or the not tensions, but the challenges when we were at early on in the business were different. Now it's a different business. So currently, more than stress, it's actually the excitement. It's the adrenal rush. Because when as founders, not just founders, I mean, for us, Samosa Singh is our brainchild, right? When you know that you're ready and you really need to put that accelerator thing, get that started. So that hunch of not being able to do that with that much vigor, because you're in the process of concluding the things, is what is kind of not bothering, but yeah, that's the adrenal thing that is happening currently. But yeah, different stages of business, different concerns. I mean, when we were COVID, when there was there, we were more concerned about how do we scale up, how do we chat, how do we enter into new cities, different partnerships. Then there's a different challenge. How do we make sure that that partnership comes out successful? So different phases, different.
Yeah.
But yeah, generally we don't keep ourselves awake at night because we know we have to work very hard in daytime.
Yes.
Oh, well said. And I think if you've gone through getting your company through COVID, I think you've dealt with a lot of stress and challenge. And if you manage through that, probably lesser challenges ahead.
That's Nikhil. You know, though I'll tell you one thing in COVID, which was very different than other setbacks, is that COVID was not just restricted to one industry or one person. It happened to everyone in the world. And what we saw that killed a lot of startups was having this so-called attitude of, little laid back. Yaar, meri galti thodi hai. It's not just that happened with me. Sabke saath ho raha hai. So it will pass. It will pass. It's just that we didn't let that feeling touch us, that it will pass. You know, we forgot that it was happening with everyone. We thought it's happening just with us. And yes, it was a challenging time. Our investors also were a little, initially they didn't know what to do. They were very supportive of how they can offer help. But I think, yes, just because we continue to scale up and we build in their faith, that's why, upping their amount and reinvesting, that's also good credibility, because there are hardly any investors who put money on the business. Everyone does it on the founders.
That's right. That's right.
So
I know I'm taking away a few things from these calls. First of all, scientists wanting making samosas, which I think is I never thought that would happen. And through an
didn't think through too.
Yeah.
My dad told me I married you off to a scientist and now you've converted him into a halwai.
Halwai, yeah. And it's not even, your name doesn't even end with Agarwal. I mean, it's shocking. But obviously, I think the ambition to create something like the McDonald's and automate it, really scale it, I think is fantastic. You've obviously picked a product which resonates with everyone. A lot of founders tend to sell products which you have to educate people about. I think in your case, that is not really a struggle. A lot of people, you can do it. It's a company which breaks even fairly quickly on the stores and cities, and you have a path to go with respect to the corporate overheads, but very clearly something that you're very mindful of. I think the one thing that came across is incredibly mindful and thoughtful about how you think about the business, and that's fantastic to see. But yeah, thank you so much for doing this session. We have a few unanswered questions that we will address over email, and if required, we'll coordinate with you to make sure that the information is provided. To everyone who's logged on, this opportunity is live on our platform. Please feel free to check out and get more details, but also reach out to us through your relationship manager or the email ID for any additional information that you require. We'll be sending you a recording of this session, so you can also look back and make sure that you have all the information that you require. Once again, please be mindful that this is an equity investment, unlisted equity investment, and hence the tenure of investment and returns are unpredictable, and you should be thoughtful about how you think about this, about investing money. Perfect. Thank you all for joining. Thank you so much, Shikhar and Nidhi, for making this happen, and hope you have a great weekend.
Oh, thank you, Nikhil. It was a pleasure. And I wish Shikhar really loved seeing so many participants, though we didn't know. We thought it's just going to be one-on-one. In fact, at the call, we were thinking, is there a deck that we need to present? But didn't even realize when the call started that it was just a Q&A. It was a very lovely evening interaction. Thank you, everyone, for your time this weekend, and happy Makar Sankranti.
Happy Makar Sankranti. Everyone can see a deck, but the opportunity to chat with you and hear your story is far more important and valuable. So thank you so much.
Thank you. Thanks everyone. Bye.
Bye.